Stop. Before you place your next trade, I want you to imagine something. Imagine someone offered you a challenge. You get paid $10,000, but only if you can make a trading decision in 3 seconds. Most traders would panic. 3 seconds? They'd say that's reckless, dangerous, impossible. But here's the truth that might sting a little. The best traders in the world already do this every day. They don't stare in charts for 30 minutes. They don't stack 12 indicators. They don't scroll social media to see what other traders think. They look, they decide, they move on, sometimes in less than 3 seconds. And no, it's not because they're gambling, it's not because they're careless, and it's definitely not because they're lucky. It's because by the time they open the charts, the decision is already made. Let me say that again because it's the core of this entire video. Professional traders don't make decisions on the chart. They make them before the chart. Now, contrast that with how most people trade. Most traders open a chart with zero plan. Price starts moving, candles form, indicators flash signals, and suddenly the brain goes into overdrive. Is this a breakout? Maybe it's a fakeout. Should I wait for confirmation? What if it runs without me? What if I lose? What are other traders saying? That's not trading. That's emotional roulette. And here's the uncomfortable reality. If you need 20 minutes to convince yourself to take a trade, you're not being careful, you're being confused. Confusion is expensive in trading because confusion leads to hesitation. Hesitation leads to missed trades. Missed trades lead to revenge trades, and revenge trades blow accounts. It's a cycle almost every trader knows too well. Now, imagine a different approach. Imagine you open a chart and within seconds you know, yes, this is my setup, or no, this is not my trade. No stress, no debate, no second guessing, just clarity. That clarity is what separates amateurs from professionals. And here's the surprising part. It has nothing to do with intelligence, nothing to do with secret indicators, nothing to do with expensive courses. It has everything to do with how decisions are made. Let me give you an analogy. Think about how you recognize a close friend. When you see them in a crowd, you don't analyze their face piece by piece. You don't think, okay, same nose shape, similar eyes, hair looks right. No, your brain instantly says, that's them. Trading can work the same way. The pros have a crystal clear image of their setup, a wanted poster in their mind. When the chart matches the poster, they act. If it doesn't, they walk away. Simple, clean, professional. But most traders never reach this level because they're trying to trade everything, every pattern, every time frame, every market, every strategy. Their brain never gets repetition, so nothing becomes automatic. They stay stuck in overthinking mode forever. In this video, I'm going to show you why fast decisions are actually safer in trading, the hidden power of pre-deciding trades, why overthinking is costing you money, how to train your brain to recognize setups instantly, and how professionals structure their trading day. By the end, you'll see trading differently, not as constant action, but as selective precision. And if you truly apply what you learn here, you may start taking fewer trades, but better ones. And ironically, that's where consistency begins. Let's go deeper into the 3-second rule, because right now, some of you are thinking, fast decisions sound good, but isn't slower analysis safer? It feels logical, right? More time equals more accuracy. More analysis equals better decisions. But in trading, that logic often backfires. Here's why. The longer you stare at a chart, the more your brain starts inventing reasons. You begin seeing things that weren't part of your original idea. A trend line that almost fits, a support level you redraw 3 times, an indicator you tweak until it agrees with you. That's not analysis anymore. That's justification. And justification is dangerous because it usually appears when you want a trade to work. Professionals know this trap, so they avoid it entirely. They don't sit there trying to make a chart look tradable. They scan for something that is already obvious. If it's not obvious, it's ignored. Think about a detective looking at evidence. If the evidence is clear, the conclusion is quick. If the evidence is messy and confusing, they don't force a conclusion. They keep investigating. But in trading, amateurs do the opposite. They see messy evidence and still force a decision. That's how bad trades happen. Now here's a truth most trading gurus won't tell you. The market does not reward effort. It rewards clarity. You don't get paid for how hard you think. You get paid for how well you execute. A trader who makes one clear decision will outperform a trader who makes 10 complicated ones. Let me give you a real-life scenario. Trader A opens a chart. He spends 25 minutes analyzing. He checks multiple time frames, adds indicators, watches price tick up and down. Finally, he convinces himself to enter. But now he's emotionally invested. He needs the trade to work because he put so much thought into it. Trader B opens the same chart. In seconds, he knows. This is not my setup. He moves on. No stress, no emotional attachment, no wasted energy. Who do you think survives longer in trading? Exactly, the one who protects mental capital. Because mental fatigue is real. Every decision drains her focus. Every doubt drains confidence. Every hesitation drains discipline. Professional traders guard their mental energy like money. They don't waste it on mediocre charts. Here's another angle. When you overanalyze, you actually increase fear. Why? Because more analysis creates more what-ifs. What if resistance holds? What if news comes out? What if it reverses? Now your brain is juggling scenarios instead of executing a plan. But when a setup is clear, there are fewer questions. You see it, you know it, you act. This doesn't mean zero analysis. It means analysis happens before the moment of action. That's a huge distinction. The pro's thinking is done when the market is calm. The amateur's thinking is done when the market is moving. One is rational, the other is emotional. And markets punish emotional decisions. Let's bust a myth right now. Fast decisions are not reckless if they come from preparation. A firefighter doesn't slowly debate when entering a burning building. They trained for it, they rehearsed it, they know the protocol. So when the moment comes, action is quick. Trading should be the same. Speed in execution comes from slow preparation. And this leads to the real secret. Professionals aren't fast thinkers. They are prepared thinkers. Their speed is just the result. On the next page, we'll break down the concept that actually makes this possible, pre-decisioning. This is the skill that turns hesitation into confidence and chaos into structure. And once you understand it, you'll never look at a chart the same way again. Now, let's talk about the real engine behind fast, confident trading, pre-decisioning. This is the skill that quietly separates consistent traders from emotional ones. And it's not flashy, it's not exciting, but it's powerful. Pre-decisioning simply means this. You decide what you will do before the moment arrives, not during, not after, before. Most traders do the opposite. They wait for price to move, then try to figure out what to do. That's like trying to plan your escape while the house is already on fire. Professionals plan the exits before there's smoke. Here's what pre-decisioning looks like in practice. A pro sits down with charts when the market is calm, no pressure, no rush, no emotional spikes. And they think in simple if-then scenarios. If price reaches this support level, then I buy with this stop and this target. If price breaks this zone, then I enter on the retest. If price rejects resistance, then I short. Notice something important here. They're not predicting, they're preparing. They don't need to be right about direction. They just need a response ready for whichever scenario happens. This removes pressure completely, because when price finally moves, they're not thinking anymore. They're recognizing. And recognition is fast. It's like using GPS. You don't debate every turn. You just follow the route you already set. Now, compare this to the average trader's approach. They open a chart with no plan. Price starts moving. Suddenly, they feel urgency. Should I enter now? Maybe I'll wait. Maybe it'll run without me. Their heart rate goes up, their judgment goes down. Why? Because the brain under pressure doesn't think clearly. It reacts emotionally. Pre-decisioning eliminates this. It moves decision-making from emotional moments to calm moments. And calm decisions are almost always better ones. Here's a powerful truth. You should never make a trading decision for the first time while money is on the line. If you are, you're improvising, and improvisation is not a strategy. Professionals treat trading like a pilot treats flying. Pilots don't invent procedures mid-flight. They follow checklists prepared in advance. If X happens, do Y. If Y happens, do Z. Simple, structured, reliable. Trading should be the same. Let's make this even clearer. Imagine two traders watching the same market. Trader 1 has no plan. Price approaches a key level. He starts thinking, is this support strong? Should I wait for a candle close? What if it breaks? He hesitates. He doubts. He enters late or not at all. Trader 2 already mapped scenarios. Price hits the level. He already decided yesterday what to do here. No debate, no stress. Execute or pass. That's it. Same chart, different preparation, different results. Pre-decisioning also protects you from one of the biggest account killers, the impulse trades. Because when you have a plan, random trades stand out as violations. Without a plan, everything feels justifiable, and that's dangerous. Now, here's the part most traders don't want to hear. Pre-decisioning takes work up front. It's not thrilling, it's not dopamine-filled, it's quiet planning. But this quiet work creates loud results because once decisions are pre-made, execution becomes simple, and simple is powerful in trading. On the next page, we'll talk about a silent killer that ruins more traders than bad strategies, the overthinking trap. And you might recognize yourself in it more than you expect. Let's talk about one of the biggest silent account killers in trading, overthinking. Not bad strategy, not bad indicators, not bad luck. Overthinking. And the tricky part? Most traders think overthinking is a good thing. They call it being careful. They call it being responsible. They call it risk management. But real overthinking isn't caution. It's uncertainty in disguise. Here's how the trap usually works. You see a setup forming. It looks decent, maybe even good. Your first instinct says, this could be a trade. But instead of acting on a clear rule, your brain starts spinning. Maybe I should wait for more confirmation. Let me check the higher time frame. Maybe one more candle. Let me check what others think. So you wait. And while you wait, the trade runs without you. Now you feel frustration. You tell yourself, I always overthink. Next time I'll be decisive. So the next time a setup appears, you don't want to hesitate. You jump in quickly. But this time, it fails because it wasn't a clean setup. It just kind of looked like one. Now you're confused. When you thought too much, you missed winners. When you acted fast, you took losers. So what's the solution? Think more? Think less? Neither. The real problem is this. You're trying to decide in the moment. Live charts are the worst place to make decisions. Why? Because when price is moving, your emotions are activated. Your brain feels urgency. Your fear of missing out increases. Your recent losses or wins influence you. This creates pressure, and pressure distorts judgment. Overthinking isn't intelligence. It's your brain searching for certainty in an uncertain environment. But here's the truth. Certainty doesn't come from thinking longer, it comes from clarity beforehand. If your setup is clear, there's nothing to overthink. You either see it or you don't. Think about recognizing your own name. If someone says it, you don't analyze it, you instantly know it's yours. That's clarity. Trading setups should feel similar. When they're right, they stand out. When they're not, your brain tries to compensate by analyzing more. And that's the warning sign. If you feel the need to convince yourself, it's probably not your trade. Professionals understand this deeply. They don't interpret overthinking as caution, they interpret it as a red flag, a sign to step back. Because a good trade rarely needs persuasion. It's visible, it's structured, it fits the plan. Here's a simple rule. If your explanation for a trade takes more than 2 sentences, it's probably not obvious. If you hear yourself saying, well, if this holds and that breaks and this indicator confirms and the trend line still respects, you're negotiating with a chart, and charts don't negotiate back. Now, here's something powerful. The best traders aren't masters of action, they're masters of inaction. They're comfortable doing nothing. They don't need constant excitement. They don't chase movement. They wait because they know most market movement is noise, and trading noise is expensive. The more selective you become, the less overthinking you need. Why? Because fewer trades mean higher standards, and high standards create clarity. On the next page, we'll talk about how professionals train their brain for instant recognition and why trading fewer setups actually makes you more money. This is where system thinking, pattern recognition, and repetition come together. And once you understand it, your approach to learning trading might completely change. Now we reach a turning point. Because at this stage, you might be thinking, okay, I understand fast decisions, I understand pre-decisioning, but how do I actually get there? How do you go from hesitation to instant recognition? The answer is simpler than most traders expect, and also harder. It comes down to one word: repetition. But not random repetition. Focused repetition on the same thing. Let's break this down. Your brain has 2 main modes of thinking. Mode 1 is fast, automatic, and instinctive. Mode 2 is slow, analytical, and deliberate. When you first learned to drive, you used slow thinking. You consciously checked mirrors, you thought about the pedals, you calculated every move. It was tiring. But after years of driving, you don't think about those steps anymore. You just drive. Your brain automated it. That's what we want in trading. We want setup recognition to become automatic, because automatic decisions are faster, calmer, and less emotional. But here's where most traders sabotage themselves. They try to learn 10 indicators, 12 chart patterns, 5 strategies, multiple time frames, multiple markets. Their brain never locks on to one thing, so nothing becomes automatic. They stay stuck in slow thinking mode forever. Every chart becomes a puzzle. Every trade becomes a debate. That's exhausting, and exhaustion leads to mistakes. Professional traders do the opposite. They narrow their focus, often to just 1 or 2 setups. That's it. Not because they can't learn more, but because mastery beats variety. When you watch the same setup hundreds of times, your brain starts seeing it instantly. You don't search for it, it pops out at you. Just like recognizing a familiar face. You don't analyze faces, you recognize them. That's the level trading can reach, but only with repetition. Here's a powerful example. Imagine 2 traders. Trader A has traded for 8 years, but switches strategies every few months. Trader B has traded for 1 year, but only trades one setup. Who recognizes their setup faster? Usually, Trader B, because repetition built clarity. time in the market doesn't equal skill. Focused repetition does. Now, let's be honest. Many traders avoid this approach because it feels boring. They want excitement. They want constant action. They want to feel productive. But trading isn't paid by effort. It's paid by precision. Boring is often profitable. Exciting is often expensive. Here's a mindset shift. You don't get rich by trading more. You get rich by trading better. And better usually means more selective. When you specialize in one setup, you learn its behavior. You understand its failures. You see its best conditions. You recognize weak versions instantly. This builds confidence. Not emotional confidence, pattern confidence. The kind that comes from, I've seen this 200 times before. That confidence is what allows 3-second decisions. Not courage, not bravery, familiarity. On the next page, we'll talk about something most traders struggle with deeply, why professionals spend most of their time doing nothing, and why that nothing is actually where money is made. This might completely change how you structure your trading day. Here's a statement that might sound strange at first. Professional traders spend most of their time doing nothing. Not analyzing, not entering, not managing trades. Doing nothing. And ironically, that nothing is where a huge part of their profitability comes from. This is one of the biggest mindset shifts that separates struggling traders from consistent ones. Most people enter trading thinking it's about action, clicking buy, clicking sell, watching candles move, feeling the rush. But real trading success looks very different. It looks quiet, sometimes even boring. Let's use an analogy. Think about a lion hunting. A lion doesn't chase every animal it sees. If it did, it would exhaust itself and starve. Instead, it waits, it observes, it studies, it stalks. And when the right opportunity appears, it acts fast and decisively. Trading works the same way. The waiting is not laziness, it's strategy. The stalking phase is where professionals do their real work. This is when they mark key levels, identify zones of interest, plan scenarios, define risk levels, pre-decide actions. Notice something important. All of this happens when the market is calm, not when candles are exploding, not when volatility spikes, not when social media is screaming. Calm planning creates calm execution. Most traders reverse this. They relax when nothing is happening and panic when price moves. Professionals do the opposite. They think deeply when nothing is happening, so they don't have to think when something is. That's a huge difference. Now let's talk about a hard truth. Many traders feel uncomfortable when they're not in a trade. They feel unproductive. They feel like they're missing out. They feel they should be trading. This pressure leads to forced trades, and forced trades are expensive trades. Here's a powerful reframe. Not trading is a position. It's a defensive position. Every bad trade you avoid protects your capital and your confidence. Professionals understand this deeply. They don't measure success by how many trades they take. They measure it by how well they stick to their criteria. Sometimes that means scanning 30 charts and taking 0 trades, and they're perfectly fine with that. Why? Because they know no trade is better than a bad trade. Amateurs feel disappointment when they find no setups. Professionals feel relief. Relief that they avoided low-quality conditions. Let's go deeper. Every trade you take carries risk. Even good setups lose sometimes. So if you take trades that aren't clear, you're stacking unnecessary risk. That's like gambling with a negative edge. The real money in trading comes from selectivity, from saying no far more often than yes. Here's a simple idea that can transform your mindset. Your job is not to trade. Your job is to wait for your trade. Big difference. One creates pressure, the other creates patience. When you adopt this mindset, something interesting happens. You stop chasing charts. You stop forcing entries. You stop trying to make something happen. Instead, you let the market come to you. And when it does, you're ready, prepared, calm, decisive. That's where the 3-second decision becomes possible, because you already did the heavy thinking earlier. On the next page, we'll break down something crucial. What actually makes a setup obvious, and how to tell the difference between a real setup and when you're talking yourself into. This is where many traders finally realize why they've been inconsistent. Now we need to clear up a major misunderstanding, because when traders hear only take obvious setups, many think it means take simple trades. That's not what obvious means. A setup can be technically complex and still be obvious. Obvious doesn't mean easy. Obvious means clear. It means the setup stands out without effort. You don't have to search for it. You don't have to build a case for it. You don't have to convince yourself. It's just there. Think about spotting a red car in a parking lot full of white cars. You don't analyze it, it pops out instantly. That's what an obvious setup feels like. Now compare that to how many traders operate. They open a chart and start digging, drawing multiple lines, switching time frames, adding indicators, reanalyzing structure. They're hunting for a trade instead of spotting one. That's a key difference. Professionals don't hunt for trades. They screen for them. If it's not immediately visible, it's ignored. Here's a powerful self-test. If you need more than 2 sentences to explain why you took a trade, it probably wasn't obvious. Listen to how this sounds. A non-obvious trade explanation. Well, price was near support and the RSI was kind of oversold and the trend line held before and the higher time frame looked bullish. That's a negotiation with the chart. Now listen to an obvious one. Price tapped support and rejected strongly. Done. Short, clear, decisive. Obvious setups don't require storytelling. They don't need a narrative. They show themselves. Another key trait of obvious setups, they don't require hope. Hope is a warning sign in trading. If you find yourself thinking, I hope it holds, I hope it breaks, I hope it continues, you entered too early or without confirmation. Professionals don't trade hope. They trade evidence. They wait for the market to prove something first. Yes, this sometimes means missing the very best entry, but professionals don't care about perfect entries. They care about repeatable ones, because consistency beats perfection every time. Let's go deeper. Many traders anticipate. Professionals react. Anticipating sounds smart, but it often leads to forcing trades. Reacting means letting the setup complete, letting confirmation appear, letting the market show its hand. That patience creates clarity, and clarity creates confidence. Here's something important. Obvious setups are obvious to you, not to social media, not to other traders, not to influencers, to you. Because your setup is based on your rules. This is why copying others rarely works long term. Their obvious may not be your obvious. Your brain needs its own pattern library built from your repetition. Now, here's the real filter. If you feel tension before entering a trade, it's often not obvious. Clear trades feel calm, not exciting, not adrenaline-filled, just calm. That calmness is a clue because when rules are clear, emotion decreases. When emotion decreases, execution improves. When execution improves, consistency follows. Simple chain reaction. On the next page, we'll uncover a truth many traders don't want to hear: why most overthinking has nothing to do with intelligence and everything to do with preparation, and how fixing that can instantly reduce hesitation. This is where your trading starts to feel structured instead of stressful. Let's address something honestly. Many traders secretly feel proud of how much they think. They believe deep analysis means professionalism. They believe hesitation means caution. They believe complexity means skill. But in trading, that belief can quietly hurt you, because most overthinking isn't intelligence, it's lack of preparation. That might sound blunt, but it's freeing once you understand it. Let's break it down. Overthinking happens when your brain feels uncertain, and your brain feels uncertain when it lacks a clear framework. So it keeps spinning, searching, analyzing, doubting. Not because you're smart, but because you're unprepared. Think about ordering food at your favorite restaurant. You don't overthink. You already know what you like. Decision made. Now think about ordering at a huge menu restaurant in a country you've never visited. You hesitate, you compare, you second guess. Why? Because there's no framework, no familiarity, no pre-decision. Trading works the same way. When you haven't defined exactly what your setup looks like, every chart becomes a debate. Your brain tries to solve a new puzzle each time. That's exhausting, and exhaustion kills consistency. Here's a powerful truth. Clarity removes the need to think, not because you're careless, but because the rules are clear. If X happens, you do Y. If Y happens, you do Z. No drama. No internal argument, just execution. Professionals don't rely on in-the-moment brilliance. They rely on structure. They define what qualifies as a setup, where entries happen, where stops go, where targets go, when to skip trades. All before the trade exists. So when the moment comes, it's not a decision, it's a recognition. Recognition is fast. Decision-making is slow. That's why pros look decisive. They're not deciding, they're identifying. Big difference. Now here's the part many traders avoid. Preparation feels boring. There's no dopamine, no flashing candles, no action. Just planning, reviewing, refining rules. But this boring work creates confident execution, and confident execution creates consistency. Let's flip a common belief. Most traders think, I'll think carefully so I don't lose. Professionals think, I'll prepare carefully so I don't have to think. One happens under pressure, the other happens calmly. Which do you think works better? Exactly. Here's another angle. When you prepare well, you trust your plan. When you trust your plan, you hesitate less. When you hesitate less, you execute cleaner. Clean execution is where results improve. Not in fancy analysis, not in new indicators, not in secret strategies. In clean execution. Now imagine this shift. Instead of asking, should I take this trade? You ask, does this match my plan? That question changes everything, because now it's objective, not emotional. Either it matches or it doesn't. Simple filter. This removes pressure, and pressure is the enemy of good decisions. On the next page, we'll talk about something that can dramatically improve results, why saying no is a trader's real superpower, and how professionals use rejection as a profit strategy. This is where many traders realize they've been chasing trades instead of selecting them. Let's talk about a word that most traders struggle with. No. It sounds simple, but in trading, it's a superpower. Because the truth is, your profitability is often determined not by the trades you take, but by the trades you avoid. This is one of the biggest mindset shifts from amateur to professional. Amateurs look for reasons to trade. Professionals look for reasons not to trade. That might sound backwards, but it's incredibly powerful. Most traders open charts hoping to find something to enter. They want action. They want movement. They want opportunity. So their brain asks, how can I make this tradable? A professional asks the opposite. Why should I skip this? That question protects capital, and capital protection is the foundation of longevity. Here's a hard truth. There are far more bad trades available every day than good ones. The market is full of noise, random movement, messy structure. Clean setups are rare. But many traders treat every small move like an opportunity. That's like trying to find gold by digging everywhere instead of digging where gold exists. Professionals don't chase, they filter. Their default answer is no. A trade must prove itself worthy of a yes. Think about that. They start from rejection, not acceptance. This one mental shift can change your entire career. Let's make it practical. Imagine scanning 40 charts. An amateur might find 10 possible trades. A professional might find one or none. The amateur feels productive. The pro feels selective. Who do you think keeps more money over time? Exactly. Because every trade carries risk. Even great setups lose sometimes. So if you take marginal trades, you stack unnecessary risk. And small, unnecessary risks add up quietly. They don't blow accounts instantly. They bleed them slowly. Death by 1,000 cuts. Now here's a perspective few people talk about. Passing on a bad trade is a profitable decision, even though no money was made. Why? Because money wasn't lost. And in trading, not losing is half the battle. Professionals take pride in good rejections. They respect discipline. They understand that patience is a position. Many traders fear missing out, but professionals fear bad trades more than missed trades. Because missed trades don't cost money. Bad trades do. Here's a mindset reframe that can change everything. You don't need more trades. You need better filters. Your goal isn't to participate in the market. Your goal is to participate only when conditions favor you. Casinos don't play every game. They operate where odds favor them. That's why they win long term. Trading is the same. You are not here to catch every move. You're here to exploit your edge when it appears. And your edge doesn't appear often. That's normal. That's healthy. That's reality. The more comfortable you become with saying no, the clearer your yes becomes. And clear yeses are where good trades live. On the next page, we'll talk about something critical: how to build a simple daily routine that supports this style of trading. Because structure creates discipline, and discipline creates consistency. This is where theory turns into practical action. Now let's make this practical, because ideas are great, but routines create results. If you want to trade with clarity, speed, and confidence, your daily structure matters. Not just what you trade, but how you prepare. Most traders have no routine. They wake up, open charts, and react to whatever they see. That's reactive trading. Professionals are proactive. They follow a structure that reduces emotion and increases consistency. Let's walk through a simple but powerful routine you can adopt. Step 1. Pre-market planning, the real work. This is the most important phase, and ironically, it happens when nothing exciting is going on. Before the market gets active, you sit down calmly and plan. You mark key support and resistance, major zones of interest, trend structure, high probability areas, news or events to be aware of. Then you build scenarios. If price reaches this level, I look for longs. If price rejects this zone, I look for shorts. If price stays in the middle, no trade. Simple. Notice what you're doing here. You're removing future decisions. You're scripting your responses before emotion appears. This alone can eliminate half of overthinking. Step 2. Define your exact setup. This is where clarity is built. You must know what your setup looks like, what confirms it, what invalidates it, where entry happens, where stop goes, where target goes. If any of these are unclear, hesitation will appear later. Vagueness creates doubt. Specific rules create confidence. Remember, you can't execute clearly what you haven't defined clearly. Step 3. Active session equals observation mode. Here's where most traders go wrong. When the market opens, they switch into action mode. Professionals switch into observation mode. They're not hunting trades, they're waiting for their levels. If price isn't near a planned zone, they do nothing. Yes, nothing. Because random trades don't fit the plan. This patience is what keeps emotions stable. You're not reacting to candles, you're waiting for scenarios. Step 4. Execution is quick. When price hits a planned area, now you check, does this match my setup? Yes, execute. No, pass. That's it. No deep thinking required because thinking already happened earlier. This is where the 3-second rule becomes real. You're not guessing, you're recognizing. Step 5. Post-market review. This is where growth happens. At the end of the session, review. Did you follow your plan? Did you take only your setups? Did you force trades? Were your levels respected? Did emotions interfere? Notice something important. You review behavior more than profit because behavior creates long-term profit. One good habit is more valuable than one lucky trade. Now, here's a powerful truth. A calm routine creates a calm trader. A chaotic routine creates a chaotic trader. Your results often reflect your structure, not your intelligence, not your indicators, not your strategy, your structure. On the next page, we'll bring everything together and talk about the final mindset shift that allows traders to truly think like professionals. This is where the transformation clicks. We've talked about speed. We've talked about preparation. We've talked about saying no. Now, let's talk about the mindset that ties it all together. Because strategies matter, rules matter, routines matter. But mindset is what allows you to follow them consistently. Here's the shift. Amateurs try to win trades. Professionals try to execute well. That difference sounds small, but it changes everything. Most traders wake up thinking, how can I make money today? That question creates pressure. Pressure to trade, pressure to find setups, pressure to be right. And pressure leads to emotional decisions. Professionals ask a different question. How can I execute my plan well today? Now the focus shifts from outcome to process, from money to behavior, from winning to consistency. And ironically, when you focus on process, profits tend to follow. Let's be real for a moment. You cannot control what the market does. You cannot control if a trade wins or loses. You cannot control random volatility, but you can control what trades you take, when you enter, where you exit, how much you risk, whether you follow rules. Professionals focus only on what they control. Amateurs obsess over what they can't. That's a losing battle. Here's a powerful analogy. Imagine a professional poker player. They don't cry over a good hand that loses. They care about whether they played it correctly, because they know good decisions repeated lead to long-term profit. Trading is the same. A good trade can lose. A bad trade can win. One outcome means nothing. Consistency in behavior means everything. Now here's the mindset that unlocks the 3-second rule. Detachment. Professionals are detached from individual trades. Not careless, detached. They don't need this trade to work. They don't need to be right. They don't need excitement. They just need to follow their plan. This emotional neutrality is what allows fast decisions, because fear and greed slow you down. Detachment speeds you up. Think about it. If you truly accept that any trade can lose, you stop trying to force perfection. You stop trying to predict. You stop trying to control outcomes. You simply execute your edge. That's professional thinking. Here's another truth most people avoid. Trading is not about finding certainty. It's about managing uncertainty. The market will always have unknowns. Professionals don't eliminate uncertainty, they prepare for it through risk management, through selectivity, through discipline. And when your risk is controlled, your emotions calm down. When emotions calm down, decisions get faster. See the chain reaction? Risk control equals emotional control equals decision clarity. Now imagine this identity shift. Instead of saying, I'm trying to make money trading, you say, I'm someone who executes a plan. That identity changes behavior because now your goal is discipline, and discipline creates consistency. Consistency creates confidence. Confidence creates calm execution. And calm execution is where the 3-second rule thrives. On the next page, we'll talk about common mistakes that silently break this rule and pull traders back into hesitation and overthinking. These mistakes are subtle, and many traders don't even realize they're making them. Now, let's talk about the traps. Because understanding the 3-second rule is one thing, living it consistently is another. Many traders love the idea of fast, confident decisions, but their habits quietly sabotage them, and most of the time, they don't even realize it. Let's expose the biggest mistakes that break the 3-second rule. Mistake 1, strategy hopping. This is the silent killer. You try one strategy, it works for a week, then it has losses. So you switch. New indicators, new style, new mentor, new system. Your brain never builds familiarity. Remember what we said earlier. Speed comes from repetition. If you keep changing what you're looking for, nothing becomes automatic. Every chart feels new. Every decision feels heavy. Professionals stick to their setups long enough for mastery. Amateurs chase novelty. Mastery builds confidence. Novelty builds confusion. Mistake 2, too many indicators. Indicators aren't evil, but stacking them creates hesitation. When one says buy and another says sell, your brain freezes. Now you're analyzing conflicts instead of executing a plan. Professionals keep charts clean because clarity greater than complexity. More tools don't mean better decisions. They often mean slower decisions, and slow decisions invite emotion. Mistake 3, trading every day, no matter what. Many traders believe they must trade daily to succeed. That's false. Some days don't offer quality setups. Forcing trades on low-quality days breaks discipline. Professionals don't trade because the market is open. They trade because their setup appears. Big difference. Mistake 4, letting social media influence trades. This one is huge today. You see someone online calling a trade. Suddenly, your bias shifts. Now your plan gets overridden. You hesitate, you second guess, you chase ideas. Professionals trust their own framework. They don't crowdsource decisions because crowds don't manage your risk. You do. Mistake 5, fear of missing out, FOMO. FOMO destroys clarity. When you fear missing moves, you rush decisions. You enter early, you skip confirmation, you bend rules. That kills the 3-second rule because now decisions are emotional. Professionals accept they will miss moves. They don't need every move. They need their move. That mindset protects discipline. Mistake 6, not reviewing trades. If you don't review, you don't learn. If you don't learn, you repeat mistakes. Professionals journal, they review, they refine. This sharpens recognition. Without review, growth slows down, and slow growth keeps you in hesitation mode. Here's the truth. The 3-second rule isn't broken by the market. It's broken by habits. Fix the habits and clarity returns. On the next page, we'll build a clear step-by-step action plan so you can actually apply everything you learned. This is where theory turns to execution, and this final step can change how you trade starting tomorrow. Now we turn this into action, because knowledge without action doesn't change results. You don't need more theory, you need a simple roadmap. So here is a practical step-by-step plan to build fast, confident decision-making in your trading. Not someday, starting tomorrow. Step 1. Choose one setup. Just one. Not 5, not 10. One. It could be a support/resistance bounce, a breakout and retest, a trend pullback, any simple repeatable pattern. The key is clarity. You must be able to describe it in 2 sentences or less. Example: I trade bounces from strong support in an uptrend with confirmation. That's clear. If your setup needs a paragraph to explain, it's too complicated. Simplicity speeds recognition. Step 2. Define it clearly. Write down what confirms the setup, what invalidates it, exact entry idea, stop placement, target logic. No vagueness. Vague rules create hesitation. Specific rules create speed. You should be able to say, if X happens, I do Y. That's it. Step 3. Replay and repetition. This is where skill is built. Go back on charts and scroll through history. Mark every time your setup appeared. Do this again and again. Your brain needs exposure. At first, recognition is slow. Then it speeds up. Eventually, the setup jumps out at you. That's how pros think fast. Not talent, repetition. Step 4. Pre-decide daily scenarios. Before the session starts, ask, if price reaches this level, what will I do? If it rejects, what will I do? If nothing is clear, will I trade? This removes live decision stress. You're giving your future self clear instructions. Step 5. Limit your trades. Set a max trades rule. Example, 2 to 3 trades per day, or even 1. This forces selectivity. Selectivity improves quality. Quality improves confidence. More trades does not equal more profit. Better trades equaled better profit. Step 6. Journal briefly. After trading, write, did I follow my rules? Was the setup obvious? Did I hesitate? Did I force anything? Keep it simple. This builds self-awareness, and awareness improves discipline. Step 7. Practice saying no. This is powerful. Open charts with the goal of rejecting trades. Yes, rejecting. Train your brain to filter first. This builds professional patience. Here's the truth. You don't need a life-changing strategy. You need life-changing discipline. And discipline grows from simple, repeatable habits. If you follow this plan for even 30 days, your clarity will improve. Your stress will drop. Your confidence will rise. And your decisions will get faster. Not rushed, clear. On the next page, we'll close this out with a powerful final message to lock in the mindset of a professional trader. A message that can reshape how you view trading from this point forward. Let's end with honesty. Trading is not about being the smartest person in the room. It's not about predicting every move. It's not about catching every opportunity. Professional trading is about control. Control of risk, control of emotions, control of decisions. The shift that changes everything. Amateurs ask, how much can I make on this trade? Professionals ask, how much can I lose if I'm wrong? That single shift changes behavior. It removes ego. It removes gambling. It brings consistency. The 3-second rule revisited. The 3-second rule was never about speed. It's about clarity. When your plan is clear, your rules are clear, and your experience is deep, decisions become obvious. Not rushed, not forced, just obvious. If it's not obvious, you don't trade. That alone can separate you from most traders. A truth most people learn late. You don't get paid for activity. You get paid for discipline. Some of the best trading days are the days you do nothing. No stress, no revenge trades, no forcing, just patience. Your new standard. From now on, you don't chase, you don't hope, you don't guess. You wait, you recognize, you execute. Calm, planned, professional. A trader who masters their mind outperforms a trader who only chases strategies, because markets reward discipline more than brilliance. Build your rules, trust your process, respect your risk. Do this long enough and confidence becomes natural. If you truly apply what you read here, your trading won't just improve, your mindset will. And that's what creates longevity in this game.